So right now I'm watching pound dollar. The day is February 4th, 2025, and it's 8:50 in the morning. So this is the first week in February, and so we have NFP, which is non-farm payroll, this Friday. So it's a very high impact news event release that comes out on Friday at 8:30. However, today is Tuesday, and so just on pound dollar, looking to capitalize a bit on the price action that I've been looking to deliver here for about two to 2.5 weeks. So in a previous video, I talked a little bit about the analysis that I'm looking for based on higher time frame narrative. So I'm going to go back out and break that down. Okay, so here we go. We've got pound dollar here on the monthly chart, and I'll take these drawings off here temporarily. Okay, so essentially what we have here is we have this huge range here from high, and I'll actually put this on a demonstration tool. So this huge range from high to low, okay? And then within that range, we have this smaller range from high to low right here. So that's our current range that I was working within to see how price would behave within it. And so what we've had now is we swept this high here, and then we've came all the way back down, and we've also swept out this high. So we could start a new dealing range from here, from this high to this low. Now, at discount of this dealing range, we have a monthly buy side imbalance, sell side inefficiency right here between this candlestick's low and this candlestick's high. Right here, we have this range. So I'll put that drawing up here now. So that big blue rectangle, that's our monthly buy side imbalance, sell side inefficiency. And I'll draw out our dealing range here as well using the GAN box. Like so. So this dark gray shaded area will be premium, and then this green shaded area will be discount. So right now we're working within discount of this dealing range from low to high. We have this monthly buy side imbalance, sell side inefficiency at discount. So we can see here where price initially it came down into that monthly BISI, and then we had a nice explosive price move here. Okay, and so now in January, we had price really dig down deeper into that monthly BISI. It priced outside of it, and then it wicked and closed within it. And it took out this short-term low right here that made that initial move into this monthly BISI. So what we have right here is a stop hunt. Okay, so anybody who had been trailing their stop or who had their stop loss at this low, capitalizing on this long move here, they've now been stopped out. And so now smart money can come in and take price higher again. My low hanging fruit objective is this monthly sell side imbalance, buy side inefficiency right here in premium. Now, Price doesn't necessarily have to get all the way up there. Um, Another level that I have my eye on is consequent encroachment of this monthly wick. So 261, 26122. And that's a monthly premium wick consequent encroachment. So I believe we'll get at least up into this red dotted line. And if we really want to get animated, I believe we'll get to that monthly civvy. So that's what I highlighted in a previous video. I talked about how my long-term bias was based around, um, the speculation that I believe price action is going to move from this blue rectangle to this red rectangle. So that means I'm bullish on pound dollar. So that's my higher time frame narrative. Now I'm dropping down to the daily. All right, so now we're here on the daily, and with this run through that monthly buy side imbalance, sell side inefficiency, and again here, this blue dash line is that monthly purge or that monthly stop hunt, and then here we have a smart money reversal. So ultimately, what we have, I'll zoom out a bit here. Long-term market maker sell model, where we have our initial consolidation up here. We have an accumulation right here. We have another accumulation around here. One more smaller accumulation here. And then this here is our smart money reversal. Okay. So we had a market structure shift on the daily right here. I'll make that black. And put a little light bulb right there. So there's our market structure shift on the daily. And I'll label it as well. MSS. Okay. Market structure shift. Price came back down here. This is your low risk. And I'm going to take this off here now. Your low risk long right there. First stage distribution. We come back down. Just like on the monthly, we have this fractal price movement where price stops out. Anybody who had been holding on this long right here stops those people out so that they can continue to run this price move up higher. Okay. And I believe ultimately we'll at least get up into this monthly premium wick. But we'll just see how price develops to see if it wants to get all the way up into this monthly sell side imbalance, buy side inefficiency. So here, this is our daily continuation purge or our stop hunt. You can see how the bodies are respecting this daily buy side imbalance, sell side inefficiency. Now, the time frames I'm using here, my higher time frame bias is the monthly. My intermediate term time frame for structure is the daily. And then my entry time frame will be the 1 hour time frame. So this is a monthly, daily, hourly, market maker buy model. So now from this daily continuation purge, I drop down to the hourly. There's that daily continuation purge. And this is hourly structure. Let's zoom in a bit. And I'm going to take this. I actually entered in on a position this morning. What I'm going to do is I'm going to take this. I'll take that off. It's a little distracting right now. How do I do this? Okay, there we go. And positions. There we go. So, yeah. So I'm long on pound dollar, and I believe price will ultimately get up into these relative equal highs potentially today. But I'll put that back on once it is relevant. I'm gonna break down this market structure here on the hourly. So the high that I was looking to get taken out was this high right here. It's where we get our market structure break on the hourly or market structure shift. Actually, I do believe we're breaking structure, so a market structure break is more appropriate. Market structure break right here. We get our hourly buy side imbalance, sell side inefficiency. I'll make that green. H1 BISI. And we can see where yesterday at lunch, price came back down into that monthly buy side imbalance, sell side inefficiency. Ran up higher, leaving these relative equal highs intact for today, I believe, or tomorrow at least. So I'll go ahead and draw those out. But this is buy side liquidity. Like so. Relative equal highs. Okay. Ran up higher, left behind this buy side imbalance, sell side efficiency. After we break structure and take out this high, leaving these highs intact, price comes all the way back down. Anybody who was holding in lunch gets stopped out. So just like we had on the monthly and the daily, we got fractal price action here. We have our hourly continuation purge. Like so. Now price runs up again. Okay, so I want to break down all of this. So this is our first market structure shift is right here at this high. Then we get a market structure break. First stage distribution is this price run right here. Continuation purge. And now our second stage distribution is this price run right here. So we get an initial run right here this morning in London. See that? We come back down, we retrace. That's about optimal trade entry. It's also at about consequent encroachment of this daily buy side imbalance, sell side inefficiency. And now we should see price really get some wings here and take off to buy side liquidity. Now I don't need for price to get all the way up here. I believe I have my take profit at this high right here. Just a low hanging fruit objective for today. I did build in a large position on demo. I didn't want to enter in quite yet on my challenge accounts or my funded accounts. Today is NFP week. And so with NFP, we could sometimes get these very high resistance liquidity runs where price will be very lethargic about getting to its destination. And so that's why I'm just going to sit this one out and, put in a position on demo. But, I mean, we could see here where even though I'm putting this in on demo, the logic or the conceptual framework for breaking down price, it still applies even in demo, right? So this is based on real-time price data. This is a live market, as you can see up here. Let's click on this. So the market's open. It's live price action, and it's proof of a conceptual framework that delivers with actual money as well. That's basically what I'm saying. Okay, so yeah, we're working within our second stage distribution. I did want to highlight this here and show that this is a optimal trade entry as well. And I'll make this so this is a lot less busy and just put my OTE lines on here. And 0.25, take that one off. Okay, so this is the price range from low to high from London today. From here, so this is actually London or Sydney Tokyo session at 12 a.m. Low to high. So it's both of those sessions where we get this price run, and then price comes all the way back down. And this is for New York session traders to get in on this continuation higher. Okay. So I'll go ahead and take this fib off now. But yeah, optimal trade entry is 62 to 70%. And we basically run almost directly into 70%. So it's a nice OTE. And that occurred at about 7 a.m. this morning. Zooming back out. So my entry was based on the 15-minute time frame. So usually, if I'm going from monthly to daily to 1 hour with the market maker model, I'd like to enter on the hourly when I'm using a monthly key level. However, I wasn't available to trade during this time here to catch this turtle suit for the continuation purge. And I also wasn't up to push a button at 7 a.m. this morning. So instead, after we hit OTE, you could drop down to the 15-minute time frame. Or in my case, I used the 5-minute. And you can see here what I'm using for entry. So it really didn't matter where I entered, as long as I entered in, let's see. So this is our New York midnight opening price. I do want to put that price level on here as well because that's important for the power of 3. So for the power of 3, if I'm going to be going long, I like to see price move below the New York midnight opening price, which is 0 o'clock. Move below that first. Okay. So that's manipulating sellers to go in short. And then we start to get this move up higher. Come all the way back down. Optimal trade entry. Best entry would be like right around here. I wasn't up for that. So now I'm monitoring the 5-minute within this hourly structural bullish price run. Looking at the 5-minute chart, we get a nice move here. Okay, we'll leave behind a fair value gap. There's also a bullish order block right here. This series of down close candles. We tap into that bullish order block. You see that? Tap into that bullish order block. We leave behind this 5-minute fair value gap. I enter in right around that 5-minute fair value gap. And I'll put my execution on now. You can track what price is doing. You can see where I entered in right above that fair value gap. There's my entry. And you can see here where price is starting to really run. And we just took out London buy side, so maybe a good idea to take something off here. I'll go ahead and take off a little bit. I'll take off one there, and then let's see, settings. I'll change this sell limit. Change that to, I'll take another 1 million units off right here. But yeah, we can see where price is really starting to spool higher now. And I don't want to see price drop back down below New York midnight opening price, so I'll move my stop loss up. We're getting some nice delivery here now. And we also have high impact news at 10 a.m. So we have jolts. And the time right now is 9:11. You can see right here. And so that high impact news comes out in about 49 minutes. And my sell limit, where I take off another partial, is actually right here at this high. So there's our afternoon session highs from yesterday. There's some buy side liquidity above there. And so I'm going to get out right before we get all the way up there. Okay, so I don't need it to get all the way up there, but I'd preferably like to get something off right here. And I have it right above that, but I believe we're just going to run right through that. Okay. And depending on where we close at 10 o'clock, we could see, because we're getting this nice push above this short-term high, which is London buy side liquidity. We get a nice strong close above it. We could see price retrace for jolts. And this, be an hourly buy side imbalance, sell side efficiency. And then from there, springboard higher into our higher buy side liquidity levels. So now I just sit here and watch this one deliver. It should be a good one. Stay tuned. All right, so I just want to get back on here now and talk a little bit about what just happened and what I believe is likely to happen. So we just had our 10 a.m. high impact news event driver. We had Jolts come out for the U.S. based news, and as soon as news came out, this buy side liquidity level that I had marked as another partial, it basically just that news event just injected enough volatility to go ahead and reach that buy side objective that I had outlined. And so now ultimately, I'm looking for price to get up here to this buy side liquidity level here, which is this red horizontal line. And so what I'll do now is just show my executions. Okay. You can see where I entered in down here. I put on 4,000 units of currency. And I believe that's also 40 lots, if I'm not mistaken. And right here, I took my first partial. Took off 1 million units of currency. And then right there at the high impact news event driver. So you can see here that arrow that just showed up. It showed up right here. Watch again. That's where I took off another partial. And now I'm looking for price to go ahead and get up into this area here. Well, this buy side liquidity level. And that's where I have the remainder of my position. And what I'll do now is I'll go ahead and take off another 1 million units right there above that buy side liquidity level. And then I'll just let the rest run to TP. And let's see, I'll go and move this down up here. And again, just clicking on back and forth just to show that this is not market replay. This is live price action. And of course, no real money is being used, but the conceptual framework that I would use for real money is at play here. And at this point, it doesn't really matter what price action does now. I've already banked enough on the position. I'm just letting the rest pan out. And so if this doesn't pan out within, let's say by 10:15, I'll go ahead and turn the recording off. So it's 10:05 right now. And if it doesn't hit buy side liquidity at 10:15, I'll go ahead and turn this off. But stay tuned. I'll let the rest of this recording pan out until 10:15, and I'll speed this part of the video up as well. So you can see here where I'm looking to pull off 800,000 as we form a new high right here. So I just pulled off 80% of the 1 million units that I just had on. So that's 800,000 units that just came off. And now I'd like to see the rest just run right up there into the buy side liquidity objective that I had outlined at the beginning of the video. And like I said before, I really don't care what happens here. I just want to see price run to the objective. And if it doesn't get there by 10:30, I'll turn this one off. I know normally at 10:30, that's when price starts to retrace against the trend that's formed in the morning. So it's 10:22 right now, and I mean I'd expect it to deliver by 10:25, but you know, price is going to do what price is going to do. and just gonna go ahead and cut it. Yeah, I'm going to cut it. I'm happy. So there you have it, folks. Again, there's proof in the pudding. That's basically what this is. This is for study and journaling purposes only. If you watch, thank you guys for tuning in. Stay tuned until the next video. Later.